Since our last update, stock markets have continued their impressive recovery in value from the lows of earlier this year. Many assets have gone from strength to strength as industries not dependent on physical sales or customer footfall added to their market share and earnings followed suit. However, some areas have not fared so well, and travel and leisure stocks have dwindled as a result of the dramatic fall in demand. Our holdings in government bonds that were so essential in the market falls have remained steadfast, held at their high valuations by investors' fears of how the coronavirus may affect the economy in the near future. Our higher yielding bonds have added nicely to returns in recent times, and our decision to increase these earlier in the year was rewarded. Today the future is still highly uncertain, with COVID cases in the UK still rising and further lockdown measures being introduced on a frequent basis. There are reasons for optimism though, and the 5 UK and US vaccine trials that we know of have the potential to transform the market's overarching sentiment overnight. Drug trials are ongoing, and we could see one or more of these going to the US Food and Drug Administration for approval as early as next month. With that in mind, we are assessing our defensive positioning in some of our investment model portfolios and are tentatively looking at where we may be able to edge up the exposure to the areas that might be the biggest beneficiaries of a return to normality at some point next year. The other major issue concerning markets and the wider world is that of the US election. At this point, many voters have already returned their ballots, with the Democratic Party, led by Joe Biden, ahead in the polls. We can see that markets are positioning for a change in the president in the near future. The prospect of a blue wave in which the Democratic Party ends up with the presidency as well as control of both houses of Congress is being welcomed, as this would likely usher in generous fiscal spending and support for key areas of the US economy. It would also give the green light to the $2 trillion green infrastructure plan to move the country away from fossil fuel dependence. We've had a tumultuous year so far, but we have managed to deal with it successfully from a portfolio management point of view. It has been a test of our philosophy to remain more cautiously positioned than most, and to the high quality nature of our most prominent positions. Now is not the time to depart from these core principles, but we may allow ourselves a slightly more optimistic outlook next year, if the conditions allow it.